Alrighty, very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. The time just approaching quarter to 12 here in Milan, 6th of May 2026. Well, the morning started off rather tentative. However, everything is pretty much moving towards areas. Alerts are going off here, there, and everywhere. And really, it's a good video. Well, I will do a breakdown, of course, of what I'm looking for. But really the video is to emphasize that, well, a couple of things. Having your favored pairs. If I bring myself over to the watch list, you can see I trade an awful lot of pairs, to be quite honest. I use the DXY as confluence, but from time to time I speculate on the indices, well, particularly the index, the DXY, GCAD, UJ, AU, UCAD, GU, GJ, EU. There's a lot of things going on, right? And of course, I can't trade those all. So it's about really building up that confluence and really trying to trade the best positions or positions, I should say, that make sense for you. As I said, just to emphasize, you can't take them all. So just a quick run through really of what's gone on today thus far. Well, the DXY approaching those areas, of course, it's nothing of which we hadn't or forecasted. The only addition that we have is, of course, another market gap, giving all the very good reason for price to want to trend back up towards the upside. Of course, we have that confirmation anyway by way of the higher time frame bias, that weekly order block, top right hand chart. You can see how price is reacting or acting in and around that order block. Price is failing to break and close below. We've had a couple of weeks where price has tried to do so, however, just left a wick down at the lows for us to look to manipulate on those lower time frames by way of wick imbalances. And when you start to refine those areas down, you find yourself in that daily order block, so on and so forth, where price again is failing to break below. So we are building up, I should say, that liquidity to potentially drive price higher on the DXY. Now, when you look to refine those areas down, I don't have any 4-hour order blocks for me to refine over on that 4-hour time frame. As you can see, all 4-hour order blocks refine within the areas that I'm looking to trade from, i.e. the weekly, i.e. refined area of the daily, which has got missing for some reason. There we go, a lot better. The lowest order block just here, that's been mitigated. So I don't really foresee price to really want to gravitate back down towards that area. But for safe measures, I do have the order blocks which would correspond with refined areas within that 4-hour time frame. So we can't underestimate the DXY. When it moves, it does certainly want to move, and then in towards those areas that, if you have already done your technical analysis, you won't be surprised when you look to get a reaction from those areas. So I've gone down to the 1-hour time frame, hence the pink or blue, or not blue, rather the pinky purple color of order block, just to give myself a little bit more of a guide in terms of most recent price action. You got that 1-hour order block there where price is pushing down into currently on the DXY. Now, if I bring your attention to the 15-minute time frame now, what does that look like? Again, refinement of the area. 1-hour order block. This 15-minute order block I will now get rid of as prices close. Wrong one. As prices close below it now. Here we are, and this is where we lie. So this 15-minute order block just there at the low. So I am looking for confirmation on that DXY before I look to get involved of any of the pairs I'm looking to trade, of which we'll go through in just a moment. So my alert, let me move that down again, and I'll bring this one slightly higher. And what I'll do, I will place a bit of a structural point there on the DXY for me to take a look at. And then the highest degree of confirmation, of course, would be wait for price to break that area on the DXY. We know the DXY can trend just like any other currency pair. So once, of course, you do get that break, look for price to come back down into that area for the reaction long, which should mean across the cross pairs now, we should be in and around decent areas looking, let's say, to perhaps short EU, AU, and GU for good examples. So why don't I go there first and foremost, or even look for a long on UJ or US dollar CAD. So let me go to, what would be the favorite? I'll go for GU first and foremost. So this morning I had an area in the market Again, nothing without confirmation. If I go to the analysis this morning, you will see that always confirmation first, GU confirmation first, GCAD. It is a range trade, so of course that comes with confirmation in itself before you want to be getting into the realms of shorting a range in line with a retail trader. Nothing against retail traders, but they do more often than not provide the liquidity first and foremost to drive price out of areas, which would be my confirmation, before then price coming back towards the order block left behind for me to take my position with that confirmation. More often than not, I'll be looking for a 1 minute break of structure once price has moved away. For example, if I give you that illustration now, if GU pushes up into this area, then more often than not, retail sellers will be the first people, or the first traders, I should say, into that trade without any structural points really broken. And then what it's imperative to recognize is we are still bullish without, let's say, the most recent higher low being broken. Retail traders will push price down. I'll be waiting here, for example, a lower time frame break of structure to ensure that I am indeed break even, or I have the range to get to that most recent low, then of course the best position would be for price, of course, to break areas, come back into an area of imbalance for that short continuation. So GU first and foremost, where are we? Higher time frame, looking for price to reject that higher time frame weekly order book to the downside. The only caveat to that is, of course, we do have not as much range as I would like trading from a higher time frame order block, as a result of that daily order block now doing the business, where price has indeed provided us with that bullish engulfing candle on Thursday of last week. And then of course that's giving us a daily order block on the daily time frame as well. That order block is supported nicely with that daily 50 MA towards the upside. So of course, shorting from these highs, we are going to need to manage our position by our most restrictive EMA, in my opinion, well, based on my strategy, which would be that 4-hour 50 EMA, and then hopefully to drive price a little bit further down into the daily. And once you start to refine those areas down, that's where you can start to stretch your take profit. Nevertheless, as we said, the DXY could be in a potential area for a turnaround. So what does that look at the moment for GU? As I said, I had an order block somewhere here on GU around about this position here. As I said, in terms of retail traders, I don't see double tops or triple tops as areas that I need to be selling from. I just look at that as liquidity, where potentially price, or rather retail traders, are looking to short instantaneously and then actually be flushed out the market to then drive price higher to the better areas. So that's where I foresee price going at the moment, up at those highs for GU before looking for confirmation shorts. What else do we have? Let's start from the top. So GCAD, as I said initially, when all the alerts start going off at once, it's imperative to recognize your highest probable degree of setup. What you'll see here on GCAD on that daily time frame, clearly ranging on a daily time frame. Superimpose onto the 4-hour, you can see even clearer that we do have a clear range bound market. So I'm not against trading ranges. In fact, I find that trading ranges are very easy once you can understand first and foremost the manipulation that takes place. First and foremost, you wait for the retail. It does sound like I've got an issue with retail traders today, but it's just the way it is. Retail traders trading support and resistance. They're looking for immediate shorts pretty much now, to be honest. Hence why we are getting that bit of reaction coming from that 15-minute order block. But to be quite honest, I'm expecting that order block to be broken towards the upside, and then price then give us some confirmation by way of bearish engulfing candles for us to start that process again. So look at the 15-minute time frame, very much so range bound. So if you didn't fancy trading the range, then you can see exactly what I'd be waiting to look for on the higher time from the 4-hour breakout, pull back into an area of interest before trading. To be honest, as I've mentioned, I believe GCAD will be a firm favorite coming towards the end of the week, particularly if we break up out of that range on the 4-hour time frame towards the upside, and then we'll be trading alongside that weekly 50 MA towards the end of the week. So GCAD, not again trading the range, but I do require to see a high degree of confirmation. And as you can see by my alerts, going short, this alert is well and truly away from current price action. So as you can see, I'll be waiting for price really to start developing, start breaking those structure points before pulling back into an area for me to then look for a short back down into that range, looking to manage by that 4-hour 50 EMA, where we can say the most recent bullish candle, bullish engulfing candle, has come out of that 4-hour 50 EMA and indeed leaving a 4-hour order block behind. However, I'm not looking at it just like that at the moment. I really want to see price break up for me to then want to select an order block to trade mid of that range, i.e. we do have a clear area here in the market on the 4-hour time frame. It is just a wick on the 4-hour time frame, but you guys already know what I say about wicks. Wicks are, I should say, liquidity. For whatever reason, price is failing to break above this area. I can't get that right, can I? Failing to break above this area as a result of that wick. Therefore, this current 4-hour candle has every degree of likelihood to look to print exactly the same. And that, in my opinion, is where the retail trader elements start to come in, where price will be driven down initially. Price is then wicked up, flushing those sellers before I would be there looking to wait for this type of scenario. So just waiting for that to happen. So that's GCAD in a nutshell. UJ, bit of a favorite for me. UJ as well, in line with the DXY strength coming out of the market. Daily order block rejecting beautifully over the last couple of days. And then yesterday we had that bullish candle closure, the first candle that actually didn't come back down into that daily order block, hence why now we have a break of that range as well, much like on the previous pair discussed. Once you get a break out of the range, I'm very reluctant then to start taking a position mid-range, waiting for price to come all the way back down, get the confirmation before looking long. 50-minute time frame, there is rather a 50-minute order block. However, that order block is far too large for me to look to be trading from, so I'm refining that down to a 5-minute. I will be waiting for confirmation before looking to take that long position. So I do like UJ a lot, but that will depend on DXY confluence coming out in the market in terms of strength. And as you guys have already seen, got a structure point, got an alert, waiting for that break, pull back, and what that will look like on UJ, as well as UJ will start dipping slightly lower, start breaking internal structure points as well. And then I'll just have to sit patiently and hope and wait for price to break, pull back, come back, and then off we go. So that's UJ in a nutshell, like UJ. AU, again, as I've mentioned, all the alerts start going off at once. What can you do? Well, seek to identify your highest degree of entry criteria. Wick imbalances on AUD US dollar. Of course, we're in that higher time frame order block where we're looking to take price lower. However, there is no order block to the left based on the 4-hour time frame. We're within the daily order block where price is currently printing tremendously bullish. However, what I'd be looking to do is use that wick imbalance here, as I've highlighted or illustrated, the wick imbalance from that daily time frame. But what I anticipate that would look like come close of business today is the daily candle, of course, is currently printing bullish. However, the wick imbalance is going to be only of the importance on that daily time frame. So hoping for that current daily candle to flip bearish, leaving another wick to the high, and that will just simply follow suit with another wick imbalance. With that said, then how would I look to approach that? Well, structure points, breaks of structure, and understand that I don't need to be the first person to sell that today. In fact, I don't need to sell it at all, to be honest, based on the other pairs looking a lot more favorable. But having a strategy, having multiple strategies and entry criterias and setup criteria that you can rely on, I can absolutely foresee myself looking to speculate on AU if it materializes nicely. Again, structure points. So I'll be looking for this structure area to be broken. The question is, well, why? Well, we're currently incredibly bullish on AU, as well as that based on the 4-hour 50 EMA, we are rejecting it to the upside. So, of course, looking at AU on the 4-hour bullish, as I've mentioned, 15-minute higher highs, higher lows, higher high. Of course, that's why I'll be waiting for the most recent structure point to be broken, back into an area of imbalance, lower time frame confirmation before looking for that short position down. As I said, relying solely on the higher time frame analysis, daily wick imbalances, and looking to take price shorter. So that is AU, US dollar CAD. I'm not sure if I mentioned US dollar CAD, but yeah, based on For the DXY, I think this is a very powerful position going forward. I took a long position on this morning, just towards the end of Asia session. That has been closed out break even, unfortunately, but it was a half decent position, very low risk, as I don't often trade the Asia sessions. But when you're at the chart, sometimes you can get pulled into positions before your trading time. It is what it is, bit of a trade error, but well, it's certainly not a trade error, but a timing error. Absolutely it is, because I do not really trade the Asia sessions. Being quite honest, well, what can we say? We've got this daily order block. We had a break of structure, not so much structure, but a point in the market where prices failing to break and close above. We had that finally, leaving us an order block behind the 4-hour time frame. Don't believe we've closed below, so it's still valid, that 4-hour order block. Yes, it is very much so still valid. What would be nice to see is price actually start again. It's rinse and repeat for me. Structure points, breaks of the structure, pullback, imbalance, and off we go. Using the DXY, does that make sense? I'd say yes, it does. We anticipate the DXY to make some moves to the highs. We're anticipating the DXY to look to break some structure areas, pull back into imbalance, and off we go. So why does that not make sense on a cross pair that uses DXY strength? Again, it's not about identifying the areas only. It's very easy to be good at technical analysis, but you have to bring in your trader elements. Your trader elements are setup criteria as well as entry criteria. There are people with 6-7-figure jobs in London that just forecast the markets but have no idea how to trade. I mean, some do have ideas how to trade, but they cannot handle the heat, because they cannot sit on their hands, they cannot anticipate, they cannot wait for price to develop before looking to enter. They're just very happy enough to forecast their direction where they believe price will go. It's not difficult to do. We believe the DXY is going to move to the highs. There we go. That's a 6 or 7-figure job in London or New York. Quite easy to obtain, believe me. Nevertheless, what I'll be looking for, breaks of structure, pullback, imbalance. We have a 15-minute order block now available. Hopefully that order block remains available by the time price continues to break up. As you can see by my alert, very much so alert ridden across all charts. Let's put this slightly lower. Let's bring this one towards a 15-minute order block, and let's add another in. Once price breaks structure points. Better case scenario, break Asia. Of course, we do lose a confluence, but what we do gain is some confirmation that price is ready to start moving towards the upside. What that will look like would be pretty much a bullish 4-hour candle closing within the next 2 hours and 56 minutes. And then, of course, a bullish 4-hour candle, even engulfing above that area, will be a beautiful uptrend on the 15-minute. Leave this order block behind, wait for price to come in, and to be honest, that would be a very aggressive position for me. Aggressive long, I say aggressive, but it's not really aggressive when you have to wait for that degree of confirmation anyway before you look to take a position. So that is US dollar CAD, very much so bullish on US dollar CAD. GU. I might just skip GU. It's a bit boring, to be fair. It's much like EU, to be honest. You can see higher time frame weekly order block refined within that order block. Bottom right hand chart, you can see the daily order block as well, where price is wicked in a couple of days ago, failed to break above. Therefore, it's very much so still valid. Lower time frames, you then just simply refine those areas down. Don't have a 4-hour order block that's available. I mean, we can for sure put a mitigated order block in, and it will indeed make sense. However, that won't really be the reasoning behind taking the position, considering the order block is mitigated. What I do like is this wick imbalance. Have a look here, top right hand chart, weekly time frame. That wick, again, as I've said this earlier on in the call, a wick, it's not just a wick, it tells us something. It tells us that at some point in time price failed to break above for whatever reason whatsoever. There is liquidity sat there, there are sellers sat there, there could also be institutions sat there wanting price to push up higher before slamming it back down to the ground. So that's why we'll be looking to foresee a short position coming out of that wick imbalance. When, with all that said, once that wick imbalance is then refined down on the area, what you'll find more often than not is a beautiful order block. That's exactly what we have, just sat there waiting for us up at those highs. Again, the trader element versus the technical analysis part of us. Technically, we understand price is looking to go down. Trader-wise, we need to wait for price to go up first and foremost. Even once price is there, you need to have your confirmations before looking to take that position. So that is GU. Running out of time, almost at 20 minutes. GJ, I like GJ a lot for the same reasons of UJ. Again, 15-minute order block is way too big. Refine down to a 5, wait for some structure points to be broken, and then off we go to the races on GJ. And then EU. EU in the area, just like GU. As I said, what do we have here? Previous weekly high as an imbalance as well. So again, using that wick. 24 seconds left, team. So I hope that's good enough for you all. All the best in your trading journey. I do hope it's going well. You'll hear from me soon. Take care. Charles.